We have a market meltdown on our hands. Stocks continuing to crumble as fears and economic fallout resulting from the coronavirus accelerate. With us now is Adam Phillips, Director of Portfolio Strategy at EP Wealth Advisors. Adam, thanks for joining us. President Trump recently saying markets are going to be just fine. Do you agree with him?
Well, I don't think so, not over the near term. I think what we're seeing today is a reaction to President Trump's announcement last night about travel restrictions, and a reaction to some of the decisions by the European Central Bank this morning. And really what investors, and myself included, are looking for is some kind of a shock and awe an announcement. This is really an all hands on deck moment where I think the collective group of investors are really looking for some kind of deliberate action to provide some kind of relief over the short term. Otherwise, you're going to see investor sentiment continue to decline, and I think that's what you're seeing right now.
Adam,
we do expect a recovery at some point, but things could be choppy here for a while.
Okay, Adam, what do you think investors want to see right now? What would calm them? What does a solution from all hands on deck look like?
You know, I think a lot of people are placing a lot of responsibility or looking to global central banks, i.e. the Federal Reserve here, the Bank of England yesterday cutting rates by 50 basis points in a surprise move. Actions like that, but I think really what investors are looking for and what would move the needle more is a fiscal response. So actual fiscal response here, meaning a cut to payroll taxes, which is being discussed, some temporary relief in the form of taxes or suspending mortgage payments, something that's being done in other countries. And so that type of relief would go a long way. One of the countries that gets a lot of attention is an economy like Germany's, which actually is one of the very few developed economies that actually runs a budget surplus, actually can afford to spend and provide some economic support for their citizens, but so far have been reluctant to do so, and I think that's what a lot of people are focused on right now.
All right, so let's talk about the airline industry in particular. I mean, airlines already facing $113 billion in lost revenue worldwide this year because of the coronavirus, Adam. And then you add on top of that the unprecedented travel ban that we got yesterday that President Trump announced. I mean, the overall economic impact seems to be a real concern, if not the biggest concern for markets today.
And you really can't downplay that, the economic impact. At first we were talking a lot with clients and just speaking to other economists, and there's been a lot of comparisons to the common flu, where the numbers are quite high as far as the number of cases and even deaths every year. And not to make light of the fact that we're, I think, just shy of 5,000 still in terms of coronavirus deaths. But what we focus on here is the economic impact. And we know there will be some, and so far it's been across the travel industry is where it's going to be most apparent, some of those retail sectors. But what makes it extremely hard right now to put some kind of a number on the potential impact is that the number of confirmed cases of coronavirus continues to climb. And so you're really aiming at a moving target, and it's very, very hard to assess the damage until we start to see transmission rates decline or this thing start to lose some momentum. And I think that's what we as investors are trying to figure out is how big will this earnings hit be? And to give you an example of how hard it is, a lot of companies have actually, typically they provide earnings guidance for the full year, try to set expectations with analysts for how earnings will come in. A lot of them, they haven't just cut their guidance for the year. A lot of them have taken it off the table entirely, saying we have no idea what this means for our earnings outlook going forward. It's just too hard to say. And so they've said we're just pulling back entirely.
What are you hearing from your clients right now, and what are you advising them to do to remain calm when they may see news like this and get really scared about where their money's going?
You know, I think that the fears are not unfounded, and we need to be sensitive first to not make light of the situation. This is certainly one that was hard to see coming, and the fact that this is the fastest that we've ever really had a correction, excluding the 1987, the Black Monday. But this is the fastest that we've ever seen markets really pull back. And so you really need to understand where clients are coming from. A lot of the clients that I'm speaking to, they're saying 2008 was hard. Not only do I not want to go through that again, but I'm also 12 years older now than I was back then. And I don't have time to try to regain what I could potentially lose in another 2008 scenario. So with us, we focus so much on financial planning here that the idea is that we can hopefully get them in a strategy where they can actually handle this kind of downside volatility, and it's not going to impact their overall living needs and lifestyle. We're able to simulate these types of drawdowns. Aside from that, we're making some changes at the margin. We've been, for the last several months, actually reducing risk across portfolios, certainly not in anticipation of this coronavirus, but just kind of an acknowledgement that after a 30% year in stocks last year, we needed to start taking some chips off the table. So it's really about coaching them through and how we view the world and how these things. The reality is that some of the best days in the market have been immediately following the worst days in the market historically. And so on days like today, this is when you do not want to sell.
Okay, well, considering that even corporate bonds, right, are down today, gold is down today, certainly a less aggressive portfolio for your clients would be benefiting them now than the reverse. But how do you reconcile that there is no flight to safety, that investors just want out?
At the end of the day, if investors just want out, then we certainly don't fight them on that. It's ultimately it's their money, and what's most important for us is that they can sleep at night. We do manage across about 11 strategies here, so from the most conservative to the most aggressive. And so generally speaking, we can find a strategy where a client feels more comfortable if as opposed to just going straight to cash, which we try to avoid at all costs. But like I said, if that's something that needs to be done just to allow clients to feel better about things, that's what we'll do. But for now, we have seen that those other less or more conservative and less volatile asset classes have been a decent place to hide and at least shield from some of the downside.
Adam Phillips, Director of Portfolio Strategy at EP Wealth Advisors. Thank you so much for joining us today. We appreciate your time.